Hello and welcome back to the Strange Water podcast. Thank you so much for joining us. I'm your host, Rex. Today's episode is with one of DeFi's pseudo-anonymous builders, WenMoon. Throughout this episode, you'll hear the deep admiration and respect I have for WenMoon, so I won't belabor the point here. Here's all I'll say. When I joined Umami Finance for a brief stint at the end of 2022, it was specifically to get the opportunity to work with Wen. This conversation is with one of DeFi's best treasury managers. And I say that with some confidence as the former treasury manager for Anheuser-Busch's $20 billion North American division. When I see Wen in action, I not only see the same core principles that make international finance operate, I see someone who understands DeFi more intuitively than anyone I know. Before we begin, as you will hear from Wen himself, the most critical part of being successful is understanding risk, and crypto is an inherently risky business. Please do not take financial advice from this or any other podcast. Ethereum and decentralized finance will change the world, but you can easily lose all of your money in the process. All right, let's get started. WenMoon, welcome to the podcast.
Good to be here.
Good, awesome. Well, first and most important question, are you a boy or are you a girl?
Guys, everyone, this is a voice changer, guys. I promise I'm a cute anime girl. Okay?
Voice GPT.
Yes, exactly.
On a more serious note, like when you and I have been friends for, let's say, a long time in crypto time.
For sure, yeah.
So before just like kind of jumping into what's going on now and what's relevant now, would you give the audience and give myself just a little bit about how you even got here, what drew you to the space, and how'd you go from like a normie to WenMoon?
Yeah, sure. So I think I have a really different experience to get into the space compared to everybody else, because I hear like a lot of people getting in through poker or because, they got in for this reason or that reason. But I got in, like I started off with a finance and economics background, right? I consider myself an economist, and that kind of propels into everything that I do, and every way that I kind of look at the markets and crypto markets, especially like behavioral economics, trying to understand how sentiment changes, for specific coins and how that affects the markets or whatever. But I kind of got in late 2020, so actually just after what everybody calls DeFi summer, right? And I guess now nobody really talks about it anymore because the DeFi lifespan is like 1 year pretty much, so I'm considered boomer. But I actually got into it because a friend of mine was making a project in DeFi, and I was like, this is really cute. That's so cute of you. And then he kind of just told me, we're gonna do this thing called an airdrop, and he tried to explain to me an airdrop, and I was like, free money? That doesn't make any sense, right? Like coming from my background, I was like, if somebody tells you that's free money, it's a lie. And so just because it was my friend, I was like, okay, I'll join the Discord. I'll hype up the community a little bit, but whatever. And then a couple months down the line, I think at the peak that airdrop was worth like six figures, and I was completely blown away. Number one, that could ever happen, and number two, why did I not create like 100 different alt accounts to farm that airdrop? And I mean that kind of led me. I mean, looking at that and seeing something that shouldn't exist actually existing, kind of threw me into this world, and I was just fascinated. I guess the main two things was number one, really, that in this space, kind of, the thing that blew me away was any of the quote unquote industry leaders, you could pretty much just, at least at that time, and I would say even now, you can just DM them on Discord or DM them on Telegram, DM them on Twitter, and they will reply, right? In what other industry can you say something like that, right? And so, it was just perfect to kind of learn from these guys, ask them questions, or even if I had like questions of why did they do something like this, and why not some other way, and even sometimes giving them some thoughts that they've never really thought about. So that kind of I did that for a while, going around from project to project, and then my friend Romy, who works at Abra.
Wait, so when before you continue, like something I always like want to talk to people about is when you saw this space, like you at least like gave it the time of day and you didn't write it off as like, oh, it's crypto, it's like where scams go to thrive and it's like this degenerate place for, like gambling and crimes and that kind of thing. Like first question is like, do you find that your friends that haven't been crypto pilled are some of the strongest like anti-crypto people which is the case for me? And two, like, what do you think kind of separates the people that are willing to jump over the chasm?
Yeah, absolutely, right. So I mean, I think, to be honest, and I see this in everybody, including myself, who is in crypto. There's like an innate wanting or yearning inside of them that they all want to have. Uh, they all wanted crypto. This is always something that they wanted in the back of their minds, and they're so like happy to kind of see this and have something that can rival the traditional financial system, something that can rival you know, money and the US dollar and everything that is corrupt in this world or whatever it is. But the traditional, I guess, the layman doesn't think that way, obviously. And if you want my honest thing, and maybe it's not right, but when people ask me what I do, I don't even tell them that I don't even tell them I'm crypto. I just say I work in finance or I work in tech, and then just like, because sometimes the conversation, the can of worms that you open from that is just like something that you don't really want to deal with at the time. So you're just like, okay, you know what, forget it. It's kind of like I kind of see it as when YouTubers or Twitch streamers kind of first started popping off. None of them like to say that's what they did because it wasn't really a career or whatever, right? So yeah, that's kind of how it is.
Yeah, no, man, I definitely hear you. And like how I like to phrase it is like, you don't get in this space without something happen to you where the system that like you were taught was fair and good and like what we're all supposed to believe in just like really betrayed you in some way. And I do think that like that's what it takes to find yourself comfortable outside of like the global financial system. But we all are like misfits in our own way. And I think that might be like the difference between like people who get washed out in cycles and not.
Exactly, yeah. I think you put it perfectly. I think we're all misfits.
Yeah. Okay, cool. So sorry, I interrupted you. So you like got involved just from like DeFi summer, just like basically like the magic of airdrops, and like the good side of airdrops. And then I think you were saying that you moved over to Abra. Is that correct?
Yeah, so I have a good friend, Romy, and he was in the project Abra at the time, and he kind of introduced me to them. As soon as I saw Abra, it was something like crazy to me. I actually like kind of learnt about Maker after learning about Abra, right? So it's kind of a little bit of a jumble and everything, but you know, Abra and Maker are very similar, and looking at what this was, right? Like minting, and and I mean the congressman even said it, right, like even quoted it, minting this magic internet money out of thin air. That was something incredible, and so I kind of helped them out for a while, and I think that was I started even 1 year, 1.5 years even ago, and stayed there, and we did a ton of crazy things. And I think, if anybody remembers Abra, it was and still to this day it has like some sort of infamous history. I mean, we did uh you know the DGen box, which everybody remembers, and now it's like the 1 year anniversary from Luna and Dokkan and everything collapsing. So yeah, that was always fun, and I think being in this industry, I faced like a ton of these. I think everybody has faced a ton of these kind of once in a lifetime generational events, right? And yeah, that's kind of from there. I think yeah, I was obviously interested in the treasury that Abra kind of started to culminate, and how the most interesting thing to me was really like something that you don't get is Abra was a product that was created, and how could they use their treasury on their own platform? Or they've already made this thing, which is like a spaceship, right? And they are using it with their own treasury now, and they have this protocol owned firms proposal. And I think something like that is has always been really interesting to me. Like how can we build something that is actually useful? And that's kind of been my thesis going into like even Umami, right? So I joined Umami now a year ago to like almost a year ago, and when I joined, the idea was we want to make DeFi products or these vault products that treasuries can use, right? Because the very first vault that we have, hopefully launching soon, or maybe by the time this is out already launched, will be the GLP vault product, and that is essentially something that a strategy that we've been running with the treasury for many months already, right? We've had our GLP position, we've held that hedged that GLP position, and we kind of want to offer that to other DAOs, market this to other DAOs and other treasuries as a way to kind of keep your exposure in the asset that you want, and at the same time earn what is like above the market rate yield, and yeah, just simple as that.
Yeah, no, and obviously, like we're gonna get to Umami, because like both that's where you're at, and it's like where so much of our history comes together. But before we get there, like, can you talk about like when you entered Abra? And for those of you that aren't following, we're talking about abracadabra or magic internet money. But when you joined Abra, like what type of work were you doing, and like I just so vividly remember this time that you're talking about, which was, like Q1 of last year. And for me, I was experiencing what you're talking about in terms of like realizing the value and the importance of treasury management around Ohm, right? Like the original Ohm, which was like, we've raised all this money now, like, is it just supposed to sit here or what do we do with it? And then and so like that's when the conversation started about like what does treasury management look like and what do DAOs look like, at least in my head. And so can you just talk to me about like what that experience was like, and like what about treasury management like really got you going? Because like I got to tell you, man, there's not a lot of treasury managers out there.
Yeah, actually, this is a really great question, right? So, back in those days, I think the main purpose of the treasury was kind of that the CVX flywheel and the CRV flywheel, and the reason for that was obviously incentivizing liquidity on curve, and so that kind of the two kind of became analogous, right? So, we were trying to figure out ways into order to build a flywheel up, and in those days, that meant, how can we accumulate CVX? What is the best way to use any rewards that we have in like a positive sum way, which has always been something that I've wanted to keep from those days, right? Like instead of taking tokens and just dumping them, like for example with Umami, we just got the Arbitrum airdrop, right? And we're starting to see, I think, some treasuries just kind of dump those tokens, but maybe there's like more positive sums things that you can do with those kind of tokens, and so with everything from that, I guess it kind of shifted, because at the end of the day, I think a lot of these things are more crypto first kind of things. You can't take somebody from TradFi and explain. I mean, how many hours would it take to get somebody from TradFi and explain to them the CVX flywheel that everybody was doing back in the days, right? They just wouldn't understand. And yeah, so doing that and working towards building that liquidity base. I think liquidity has always been one of the biggest problems in DeFi, and something that everyone's trying to solve, and even I'm trying to solve with like some of even our advisor projects. How can we get options to help us incentivize liquidity? How can we do this or that? So yeah, it's just all of these things kind of come together. You know what I mean?
Yeah, for sure. So we'll pause the conversation about like effective treasury management for after we get through your story. So you're at Abra, you realize like your passion and like what is like interesting to you is in treasury, like real treasury management and allocation and like being on the ball and like in emergencies and that kind of stuff. And so you find your way over to Umami, which for those of you who aren't following along, correct me if I'm wrong, but at the time, Umami as a project literally just was a treasury.
So at that time, like I joined Umami, I guess halfway through its lifetime, and it started off as an own fork, right? So yeah, exactly. Like all own forks started off as Ponzi's, and then they became like these massive giant funds of these treasuries, and they're still to this day actually. Some of the own forks from those days are some of the largest treasuries that we have in. And so yeah, that's where it was when I joined, and that's what I guess my main thing was, right?
Yeah. And so, okay, so you join Umami and it's a treasury, right? That may or may not be allocated. And even if it is, like, is probably not done sophisticatedly. And then, when I show up, probably in late May or early June of last year, is we've already like kind of established that we know that the vaults are like the product that Umami is going to like focus around. And so, can you talk a little bit about like, and I guess like the prologue, or sorry, the epilogue to that story is like once Umami figured it out, the entire industry realized like the only thing worth building is GLP vaults. And we've seen just like a Cambrian explosion of GLP vaults that, some are good, some are bad. Like all of them are not as sophisticated as what you're building today. But even going back to like the less sophisticated version from May of last year, can you talk a little bit about how you and like the team together like identified GMX as this platform and as this like engine that would like really come to define the entire category during this bear market?
Well, I think so. Actually, when I got there, I'm just kind of reminded now. The first GMX vaults were already kind of in construction, right? But yeah, I mean, it really has been like a GMX explosion, and the reason is quite simple, right? I think GMX did what is like maybe you can see in hindsight as a quite simple idea, but they executed it perfectly, right? They had that an easy to understand LP and an very user friendly and degen friendly, I should say, platform to kind of leverage and then earn fees from, right? So it really was, I guess, the first, maybe not the first that invented the term, but at least one of the first projects that was producing like a ton of yield. I remember like some days it was producing more than like the Ethereum transaction fees or something, right? So yeah, it was an obvious if you're trying to extract value, which is one of the things that any vault builder is basically trying to do. It was one of the primary kind of spots that you were looking at, obviously, to try and extract that value from.
Yeah, no, and again, like especially in retrospect, like it's just it's so painfully obvious that like it kind of even hurts to be having this conversation. And I just kudos to like you and the team for being able to take an idea and like meme it into like the economic engine that's keeping all of our ETH like above 1500 or whatever. But the I think speaking of the vaults and like the V1 version of the vaults, like one of the like it sounds like glamorous to be a treasury manager, right? Like like you are in charge of all this capital and you can put it in all these exciting things and generate real yield. But the flip side of that is like you're taking an incredible amount of risk on behalf of the protocol, right? And
Obviously, like the protocol is taking a lot of risk at the same time, right? So we've seen some treasury managers or just you know not even treasury managers, just treasuries being managed by projects, and then they're just completely losing value. And I guess sometimes it flies under the radar, sometimes it doesn't. You know what I mean?
yeah, I mean, depending on how it's happening, if it doesn't like manifest in the numbers in a specific way, like people seem to not notice, or it just
100%.
Yeah. So anyway, I bring it up to like kind of draw the conversation towards like what is it like to be a treasury manager during like as you said, like these existential crises that we apparently are supposed to experience once in a lifetime, but get them quarterly. And like how do you deal with everything from like being responsible for capital that's like during the Terra meltdown to like building products that are supposed to like safely custody these products that aren't like performing the way you thought. Like, what is it like to be a treasury manager in the meltdown moments?
That's a great question, right? And I think, like to be honest with you, like in those situations, that there isn't really much of a job. Like the actual job is before that, right? Making sure that if I were to be 100% here, the real job is the risk management, right? So in order to have your treasury and make sure that you are able to pay your devs and you're able to keep the project going, you want to make sure that whatever you have your treasury in, or however you're holding your treasury, and even things really basic like OPSEC, how is a multi-sig being held, and stuff like that. All those things are incredibly important, and all of those things, if you do right, are able to prevent 99% of any of these kind of things affecting you. And so if we take FTX, for example, I think we saw some projects, not all, and not even a vast majority, but some projects kind of had their treasury on FTX for whatever reason. And maybe they were actually like a more centralized treasury, right? They weren't held by token holders or whatever, but they were still the form that OPEX was coming for those specific teams. They were held on FTX, and for whatever reason they had 100% faith in FTX, and they forgot the age old the age old lesson in crypto, which is not your keys, not your crypto, right? So, I mean, if you're falling victim to them, I think in a lot of these cases, uh, you're not going to be you're not going to really make it very far, right? And so my philosophy has always been, in order to preserve this, I mean, obviously it kind of depends on whatever the specific protocol is trying to do, right? If you're trying to chase yield with your treasury more than chasing sustainability, then sure, you're going to be facing these kind of problems where you're going to have to be up at night trying to take your money out of Anchor, or trying to take your money out of FTX, and trying to be the first one out the door. But my philosophy is just completely avoid those situations as much as possible, and you won't have to actually be on those at those times, just completely freaking out. You know what I mean?
Yeah, I think what you're saying is that like if your treasury manager is freaking out when the market's freaking out, like it's already too late and you've lost.
Yeah, yeah. I think that the real job was much earlier than that.
Yeah, yeah, it was in like the planning and the strategy and like foreseeing these events and like anybody can move funds around on chain. That's not what's important.
Yeah, and I think nobody can foresee these events, and I'm not even saying that I can. It's just there are no I couldn't foresee FTX blowing up, but I can foresee some sort of uh, you know some drawbacks to having all of your OPEX runway on a centralized entity, right? If that centralized entity goes down for whatever reason, even if it is FTX, and even if you do trust them, then that will be bad. But it's kind of the same in my opinion as if I gave the multi-sig one-of-one access to just one person, then sure I could trust them, as much as I want. But at the end of the day, there is that risk factor that you're kind of introducing, and you want to mitigate as many of those risk factors and just make them as low as possible, right?
Yeah, no, yeah. And I think yeah, I mean I think like for better or for worse, like this industry like puts you through the crucible and like builds us into stronger versions of ourselves. Like I don't know, for in this context we're talking about like treasury management and like they put you through the lessons and you learn the lessons or you don't, but like if you survive, like you just grow more resilient, and I think like I guess what I'm trying to say is like the beautiful thing about this space and experiencing all these crises is that like we are learning what to do and what not to do.
Absolutely right, and I think that applies to everybody, right? Just any average DeFi user, any average uh, anyone who's holding crypto, right? Everyone knows that the coins can go down like 90%, right? But if you're shocked when they do, you've already made that mistake, and I think everybody who's still here has learned that lesson, right? Because we've seen some people, just some builders, some users just completely leave during the bear markets, and it is usually what happens. But if you're still here at this time, I think you've already learned that lesson.
Yeah, so picking up on that and like kind of the lessons that we learned and like the I don't know, treasury managers it turns us into. Um, what like at a high level, like what do you think makes a good treasury manager? And choose to answer this sequentially or in parallel. But like how is that different from what makes like a good personal investor?
I think so really it's all about portfolio management, right? In both cases. And a good a good trader, like let's say I think you mean trader, right? When you say what you say, by like a
I
personal
mean,
trader.
I think trading is interesting too, but I just like I can think of myself as Rex DAO, right? And I'm managing my treasury, or I can think of myself as just like I own a bunch of ETH, right? And so when you think of like managing your personal stack versus like acting as a treasury manager, what are the things that you think like are the same skills, and what do you think are like is important to think about differently?
So I think for someone on their own personal portfolio versus like a treasury, the treasury has maybe some operational expenses, or this and that they have to kind of take care of, and I would hope maybe you have a different risk preference than the treasury, and it all really comes down to what every personal and like every DAO feels about those specific things, right? So let's say you're you are extremely risk adverse, or you are extremely risk friendly, and you really think that ether is going to go up to the moon. That is not what maybe I have the exact same view, and I do actually have the same view, but that doesn't come into play when you're kind of talking about these things, because like the goal for I guess a treasury, at least Umami's treasury, the way it's doing, maybe not every treasury depending on the size, but is kind of that capital preservation. And I think everyone here, at least personally, is here to try and make it right, or whatever it is. And so we have our thesis, and we can kind of act on that. But as a treasury manager, you don't just have the your own, if you lose your money because ETH goes down, that's on you, right? And you can kind of say that. But as a treasury manager, you're kind of doing this for not just yourself, you know what I mean? It's like a bigger play that you're making, so you need to be more careful, and you need to take your biases. It's more important to take your biases away, and everything that kind of revolves around that.
Yeah, that makes sense. And it's like the kind of thing where it's like I don't want to make any assumptions about you when, but like if you are like doing really well and don't have any kids and like you know, you might be willing to like eat a 80% loss on your portfolio, but if your coworker like needs to feed his family tomorrow, like that's just like not a risk that is acceptable to him. And like that's I guess what it means to be like part of a community and part a treasury manager that is like owned collectively.
Exactly, right. So everybody has their own risk preference. I know people who do have kids, and they're still in crypto, and even I'm kind of saying, they're like, well, if I had kids, and if I had all these things to worry about, then maybe I would change the way that I kind of view a lot of these stuff. But right now, I'm willing to take that bet on ETH or whatever it is, and even if it does go down 80%, I'm completely fine. And yeah.
I think that's like the hardest part about this industry on a personal or professional level is that like the numbers are so wild and so large and move so quick that it's like really easy to lose yourself and like get emotional about it. And
I think for like a personal trader, or like a personal, if you're trying to allocate your own capital, I think that's the most important lesson that you can learn, right? Just to make sure that you're not sweeping in with those tides of, I'm I'm seeing these big numbers and I'm internalizing this, and then I lose this, and then I've kind of like, I think I talked about this in one of my tweets, and I think Dejan Spartan as well. He puts this much better than I could ever put it. But a lot of the times these things kind of have a psychological toll on the way that you kind of act. And 99% of the time, if you can just be the exact same trader, but just take those whatever it is that is making you feel that psychological um, you know warping out, you're going to be a better trader, because those things that are making you feel that way are what is leading you 99% of the time to make every single one of your bad decisions, right? I'm sure you've seen it yourself, and everybody who's watching is probably thinking the same, right? How many times has it been where like a coin goes up like 10x, and you think, well, I can, like, look how rich I am, and I'm such a great trader, and this and that and this and that. But you know the goal is kind of taking that out of your psychological mindset, so that you can kind of look at things objectively.
Yeah, I mean, how common of an experience for everyone is it? Like the first time you trade perps and like suddenly just get like liquidated out of nowhere. Like your first reaction is double or nothing. Like I can win it
Man,
back.
I remember back in the Aber days, I remember opening up the Discord. Man, people used to blame us for getting liquidated. Oh man, it was a crazy time.
Yeah, well, I definitely remind me if I forget. I want to circle back to like what it's like to be a treasury manager in this kind of like the good part about this industry is that you're so exposed to like the leaders and you can get in contact with like
Yeah,
Sam Kazemian to like Do Kwon,
like,
like to you
yeah,
can get in contact with these people whether or not they should be in contact with. Um, but like on the flip side, like what that means is these people have contact with you, and like let me put it this way: like the treasury manager at J.P. Morgan like doesn't have to like explain why like he made a hedge position against like this asset that like everyone else is like super exuberant about. And so I said let's talk about it later, but I've already introduced it enough. Let's talk about it now. Like, what is that like to be a treasury manager and like be accountable in a way that like just doesn't exist in like corporate America or UK or really anywhere else?
that's a great question, right? So, I mean, I think some of the time you can say that, if you're getting called out on Discord or whatever for whatever you're doing, probably you're making a bad decision, right? If everybody is against it, and I think we see that today. I mean, I know I'm probably dating the podcast, but with
No, I think
Aragon,
we're gonna. I think I'm gonna send this out tomorrow. So we can go super topical.
okay, okay. So Aragon, I mean, if everybody's like in their comments and screaming at them for what they're doing with their treasury, it's because that isn't what you're supposed to do, right? But
And sorry, just for the audience, TLDR, Aragon decided that what they called like risk-free raiders or something were buying up the tokens in order to like make a governance vote, in which basically like the centralized foundation didn't like, and so citing fiduciary responsibility, they have taken the assets out of the DAO to fund a grants program.
yeah, exactly. And I think things like that, in one way, obviously it can increase stress, like it's probably more stressful and whatever. But like at the end of the day, it's always going to be stressful, even if it's just your, like, the guy above you screaming his head off at you, because you made the same bad trade, or if it's a Discord guy. But at least with their space, in those situations, there's number one, more transparency, right? Where else can you see this kind of thing get called out on Twitter like so immediately, right? And number two, just it kind of holds you accountable, right? It's, I mean, I guess we're seeing these grifters who really don't care, but the idea is at least that if you if you're gonna get called out on Twitter and you're gonna face all this public backlash, then hopefully that will stop you from making idiotic decisions, right?
I think like the old adage of like sunlight is the best disinfectant or something to that effect, right? Where like
Yeah,
transparency is like ultimately good for everyone is like 100% true. And like you really need to believe that to believe in Ethereum. But
exactly.
um man, like that you're being a token holder, man. I'm asking the treasury manager like how does it feel? Like I'm sure it sucks, right?
No, no, honestly, like it 99% of the time, it adds a level of accountability that like you're always thinking with every trade, right? What will the Discord think? Or whatever it is, and that prevents you from making those and decisions. But like I will be honest, the community is incredibly, at least the one that we've cultivated is incredibly generous and kind of listens to why one certain strategy is better than another, or is willing to have those kind of discussions. But I've seen some communities that it would probably I would probably tear my hair out if I was if I was part of them, and I probably wouldn't take the job in that case.
Yeah. Yeah, yeah. So I like I'm trying to figure out how to ask this question that does not ask you to like name any names or like call anyone out, but like I am really curious to like kind of tease apart like what makes a treasury that's well managed versus one that's not. And so like again, without naming any names or making yourself uncomfortable, like what when you see like an unsophisticated or a poorly managed treasury out there, like what are the hallmark signs that you for you?
The number one, like I can really boil this all down to one thing, and it's improper risk management, right? It's I see these kind of treasuries who are like, yo, there's this opportunity that's earning me 2% yield on this new DEX that has upgradable contracts, and I haven't done the proper due diligence, and you're just sitting there like, are you for real? And then like, a week later when it gets hacked and they've lost that, you're kind of this is kind of what did you kind of expect, right? That is in my opinion, and we've seen it maybe a couple times, but really, if you see, that sort of thing happening, it's probably something to stay away from. You really want to make sure that you're doing the proper due diligence. Like risk pricing, and keep in mind, even I say risk pricing is incredibly difficult in DeFi. So I'm not really asking anyone to, you know give me exact numbers of what they think risk is, but like at the end of the day, you've got to make sure that number one, are you how much capital are you putting at risk, right? And I think a lot of the time you see just these protocols concentrating so much capital into these strategies, and then even if they get wrecked, even if they don't, right? Like I think this is the important bit. It's not really about the result. It's about you shouldn't they probably should not have done that, and that was improper risk management to place a trade that was like so high capital, and they could have lost half of their treasury if the contracts were upgraded and whatever. And a lot of the time I like to talk to these teams and see what due diligence did they do, and a lot of the time I get the right answer. I get, oh, okay, I didn't even think about that, and they've got their devs even looking at the smart contracts. And I think this is actually a really great point, is that the great thing that I can do that probably an individual trader can't do is that I can ask my devs, right? If I see a new protocol and I want to allocate some capital to it, or if I want to announce a new partnership with a new protocol, I can ask my devs, can you quickly just have a look at their contracts and tell me if you know they look good, and audit or not? Because I don't know how everybody stands on audits, but I'm sort of on the fence about them. I think a lot of the time they are rubber stamps like Certic. Depending on the auditor, obviously something like Halborn or Zokio, those are very good auditors. But it's one of those things that when you get an expert looking at the contracts, can make you feel much better. You know what I mean?
Yeah, for sure. Yeah, and I mean, again, I think we can have a conversation another time about the auditing industry. But like, there is absolutely objectively no question that like peer review is good and like the only way really to move things forward. And yeah, man, just like on your overall point about sizing risk, I mean, the one that like really clicked shit in for me was the like, do you remember when 3AC was like really getting blown up, and like the chart that was like really making the rounds was like the economics of a carry trade, and it was essentially like this like slow, or we all do it backwards, right? Like this like slow increasing line up, and then
And
like
then,
drop down.
yeah, yeah.
Yeah. And like
Yeah.
for me, that is, I don't know. I mean, like that, where all of our brains are weird and work in different ways, but like that for me, like clicked together what it really means to like understand risk, you know. And I think that yeah, again, for better for worse, like when you and I talk all the time offline about how like it doesn't matter what happened, the fact that it happened is good because it is something you can learn from. So like none of this feels good, but like the nice part about being in crypto is like if you stick around, you learn how to do all this stuff because you have to.
Yeah, yeah, and I think that's an excellent point, right? So that chart, especially of the carry trade on, and I think the one that blew 3AC up was obviously UST and Anchor, but like you could see that trade, and even I was obviously assessing it, and I never played a part in it because the truth was, the crazy thing to me actually was, you know, some of the guys who were doing this trade that I was talking to, some of the quote unquote smart guys, were basically saying like, I know USC can blow up, right? I was like telling them, this is a, I was trying to tell them in the contracts, right? Like this is an algorithmic stablecoin. Buy the contracts, trying to teach them this stuff, and they were like, "No, I understand,
Yeah,
but
yeah, I get
I'll
it.
get out. I'll get out before everybody else, so I'll do
Yeah,
that." And so it's just, if you start to go down that kind of path, obviously you've already gone too far, right? And I think that applies to both, like if you're trying to, we're kind of talking about like earning yield in DeFi, but the same works for, any shitcoin, right? So everyone's buying these shitcoins and everyone's saying, I'm going to get out first, and you don't really know how big the door is, and like, how can you actually say that you're going to be out first, right? And yeah, so that's like a whole other can of worms. But at the end of the day, all that meant was no way the risk of this like algorithmic stablecoin that was like completely unbacked at like the time that we were looking at. Of course, like I guess even back to like 1-2% or whatever with that reserve fund, which didn't really do anything. But that whole thing, no way, the risk of that was way over 20%, right? So when I saw that, I was like, no way, I'm taking this. And that's kind of how you have to look at these things. And I think a lot of the time these kind of funds fall into kind of uh, what is it where you do something good and you think that you're so smart, right? Like they self-confirmation bias, right? And they were just falling into this trap and pricing everything. Okay, this is fuck this. Let's up the leverage, right? Why is there not 3,000x leverage on this strategy and whatever, and then blowing up, and you're kind of sitting there like, this is the tail risk. What did you expect, right?
yeah. What you're saying just like reminds me of like my biggest takeaway in terms of like my personal like growth and development from the SBF saga was like if you ever find yourself the main character, like it's the beginning of the end, right? Like you are in a very dangerous position. And I think that that's like reflected in all these guys that we're talking about, but it's like really just the reason it's a dangerous thing is because like you lose the ability to size risk in any like appropriate way.
Yeah, and I think, I mean, the thing about these main characters is already another can of worms, right? I mean, I think you can, the popular picture, right, with all of these guys who have all been main characters at one point, and then like how many of them are basically gone, right? How many of them have been wiped out? How many of them are no longer here? Whatever it is, and it's just crazy, right?
Yeah, well, it's even crazier for like I'm pretty sure I'm a much more recent. No, no, you said you joined in 2020. I joined in 2021, so not that long after you. But like I was around when Sifu showed back up, and I had to spend like the first 2 days of that figuring out why it even mattered. Like our
Oh
we have like
wow.
these villains that go to nothing and then they like reappear, and I just man, it's wild.
That's crazy. Wow.
Yeah. Yeah. So anyway, back to like treasury management and the conversation at hand. So like one of the things that I like really always like loved and respected about you is that like you're like a great treasury manager in that you're able to like figure out the appropriate like amount of assets and where they belong in chain and that kind of stuff. But like I've never seen someone use like the work that needs to be done in order to keep an organization moving to like to grow the business and like do such business development and grow the network in like a way that you do. And so
You're,
just
you're giving me way too much credit.
nah, man, like I love that you're young and humble and like don't ever become the main character, but like no, man, like you are like very well respected and known, and like you're very much part of this, like a core part of this ecosystem, and part of that is because like you're able to like take a real treasury and like use that to open the door to like talk to people and then like get everybody on board with like rowing to like a new positive sum target. And so like one, I just like I want you to know that that's what me and like the rest of the industry thinks about you. But two, like can you talk about like how that kind of work happens, and like I'm pretty sure that's what you love about treasury management, no?
Yeah, so I mean, I completely appreciate your comments, right? Of course, I can't accept any of that, but like yeah, you're right. At the end of the day, this actually is one of the greatest points. I mean, I just yesterday I was talking to this fund and I was kind of telling them about the strategy, and they had actually been running a similar strategy, and I had been running a similar strategy with the treasury, and we were kind of talking about how they're running the strategy, and why exactly what we're doing is with the vaults is so unique, and whatever. And then they kind of understand and they kind of get it from that point of view, and it really helps in those situations, of course. And yeah, so for sure, like it kind of opens doors in BD, right?
Okay, yeah, like obviously business development, like it I look at it in two different modes, right? Like there's business development for people who understand like the game that we're playing, basically like other people who are already degens or other crypto protocols. And then there's like business development for people who are like completely outside of this, right? And like usually what that means in this context is like helping people get comfortable with your product so that they're willing to like put capital in it. But just like kind of in general, without any like specific conversation that I'm referring to, how do you like communicate these types of projects to people that aren't like necessarily comfortable with like just some of like the baseline knowledge that we have?
Okay, so I think that's a great question, and it's actually probably easier for us than many other protocols, just because what we are kind of doing is kind of easily translatable. I can kind of explain GMX to these guys. Maybe they are not used to this kind of exact payoff, but they definitely can understand. There is actually one singular counterparty, and that's earning all the funding. And essentially, what we're doing on the other side is like that funding rate arbitrage, right? Except that we're also taking the trader P&L risk, or soon, hopefully, we'll be releasing the trader P&L hedge risk, which will just be funding rate arbitrage, right? So when I explain it when I'm kind of like taking these, the DeFi quote unquote terms like impermanent loss, and I'm translating it into something that these guys know, like gamma or whatever, then they can kind of understand, and then they can kind of get on that level, because they're not going to take the time to learn the terminology. So if I can translate it for them, that's how they are like, oh, okay, I got it, boom, that's it. We're on the same page, and that's kind of how it goes.
And then just like this is coming from my like specific knowledge of I guess like an ancillary part of how the GLP vault works, but like part of that is like you're buying insurance, right? Or at least at one point you were buying insurance. And I guess like that to me is like a vertical in DeFi that's like super, super interesting, because like to people outside of this world, it's like, oh, I understand insurance. It is the backstop. But to people within DeFi, it's like that might be the most sketch thing, because like we don't actually think that it can kind of like do what it needs to do. And so I just like wonder, do you ever find these like moments where like the DeFi understanding and the TradFi understanding are like so separate that you like really need to do some work to bridge that gap?
Like it, I've always the good thing I think about the way that I kind of like understand because I especially back in the bull run days, it was a situation where like nearly every day a new innovative protocol was coming out, and it was like a race to kind of either ape in as quickly as possible, or like me trying to like read the docs and understand what is going on. But the exactly. So these things are kind of completely out of the realm of what anybody understands at one point, but you're trying to understand it from in anyone learning something new, you're trying to understand it from what you know, and thankfully, like I come from that same side as these funds or these investors that are like they know those terminology and I know them too, and translating it like is kind of how I learned these new protocols off the start, right? I think obviously there are some that are like completely out of this world and maybe lost causes in terms of trying to explain, okay, how does an ohm fork work to an institutional client. But at the end of the day, I think there is always some sort of parallel that you can kind of draw, right? Like it's kind of explaining something new to someone, right? Like if you've never tasted this food before, but what like two foods like it tastes like, I can
Yeah.
say, oh, it tastes like this, it tastes like
Tastes
that.
like chicken.
Yeah,
Yeah.
yeah,
Yeah. Yeah.
exactly. So it's kind of it's kind of explaining it in those terms, and that's what is like needed to make that click for these guys.
All right. So for all of you main characters out there, like just take a lesson from WenMoon Mastercraft, where he's telling you that the reason he's never run into this problem is because he's so damn good at translating between us with brainworms and the TradFi brainworms. But he says it in a magical way. So again, when you deserve all the praise you get, and man, you're like the real deal for treasury management, and just man, I'm proud to know you. So, like, just want to like move the conversation on and talk about Arbitrum in our last few minutes here. Again, like I said, we'll release this very quick so that it's relevant. But like the thing that I've been tracking over like the last week or two is this new dex on Arbitrum Chronos, which like in the first day got 160 million TVL. I think it's up to 230 now. And like when I look at that and I look at Arbitrum, I think like on the one hand that's good, and I like activity, and I like that people seem to be using this. But on the other hand, like there is that just like does not pass the smell test to me, you know? And I just there's literally actually literally no one more plugged into like liquidity on Arbitrum than WenMoon. So do you just like have any like thoughts or insight onto like what is going on, and like what does this mean for like the stability and the future of Arbitrum?
Yeah, so with Arbitrum, obviously, for the past few months we've seen a boost in, I mean, we've seen an absolute skyrocket in their TVL, right? Because activity on Arbitrum is growing, and I think, even right now, there's never been a time to jump from mainnet to Arbitrum, like a better time with the mainnet fees just skyrocketing, right? And because of all of these shit coins, and for some reason none of them are on Arbitrum, but I'm totally happy with that. But yeah, so we have like this liquidity kind of engine churning because of Arbitrum having lower fees, the now the liquidity injection into all of these DAOs thanks to the Arbitrum airdrop, and now this like new dex pops up. But like here is the thing, I think we used to see this sort of thing a lot back in the days when I kind of started out, where like these dexes would pop up out of nowhere and gain even like upwards of a billion TVL, and like you kind of sit there and you kind of wonder where the hell is this TVL coming from. A lot of the time it came from like these insiders that were just coming in to farm these rewards or whatever it was, or for whatever reason kind of like push this dex up the TVL rankings. So that could definitely be part of what's going on here. We haven't really seen that in a long time, but definitely, like, I mean, who's heard of this Dex before it kind of popped up? I didn't hear about it. So like you kind of suspect where do these guys kind of find out of this Dex from? I've looked at the liquidity. It's actually mostly non-native tokens. So I was gonna say, maybe it's their own token that they're kind of putting in LP pools, but it isn't really the case. It's like ETH USD. So I do think, we could do a little bit of wallet tracking and see there. But in terms of is it healthy for the ecosystem, I think at the end of the day, like if these protocols are there because this whale is doing something malicious or whatever, I don't think it really affects the chain, thankfully, right? Like it kind of we know who the real Dex players are on Arbitrum, right? That's like Camelot, that's GMX, and and so forth, and they're doing what they're doing, and they're still churning out, and their TVL. If you look at the TVL, that's still growing, and it's all the numbers are all looking good, and those are the ones that we want to be watching, and I'm watching, and everything's still looking good. You know what I mean?
Yeah, I mean, I think if you were to like my kind of naive or my first impression response to this is like this like just seems like not great and like you know I would never touch Kronos with a 10-foot stake and like just like what is happening here, but like I am very much reminded of the was it the Stargate launch on layer, which was like the first layer zero application that got like so much TVL so fast, and I think there was something about Almeida and like the coin and some like bid or whatever. Just and I just like remember walking away from that being like, I don't really know what's going on here, but like there's danger around this protocol. And now we're like a year later, and like I don't feel like that anymore.
Yeah, yeah. So I think, as long as everybody kind of respects their own that own feeling, like I mean, Stargate was a legit protocol, but if you're sitting there and you're feeling that thing, then I would say, if your gut is telling you to stay away, then stay away because you can't you're not going to be able to lose money in a rug if you never touch the protocol, right? Even if it is a rug, and like the most important thing is for you as a user to just preserve capital and to make sure that you are like surviving in this ecosystem. So if you see this like new protocol pop up with 100 million TVL and you think it's fishy, that's probably a good enough reason for you to stay away. And if you are really interested, then the best thing to do is to do your own research, right? It's as always. And if you can, then maybe even get your devs to look into the smart contracts like I do.
Yeah, yeah, yeah. And I am frustrated by do your own research in general because like quite frankly most people aren't capable of doing the research. But I think if you're not capable of it too, you have to ask yourself serious questions of what you're even doing here. And I said this on the Leviathan stream a couple of days ago when we were talking about meme coins, but like if you ever find yourself like making decisions because you missed the boat on ETH or on the last meme coin or whatever, and you need those kind of like, multiple like 100 or 1,000x returns, like that is how you get rugged and like how you get taken advantage of and like how bad things happen. So I think when to your point, just like your gut's there, listen to it.
Absolutely, yeah. It all comes back to that psychological thing, right? If you're feeling that FOMO, that's probably a good enough reason for you to stay away.
No, yeah, man, for sure, for sure. All right, Wen. Well, we've been at it for an hour now. I don't want to take up any more of your time. So, first of all, just thank you so much. I really appreciate the time and the support and just, man, the friendship. So, thank you. And before we go, where can the people find you?
Well, you can. I like to shit post a little bit on Twitter, so you can follow me there.
Yeah, great. 0x WenMoon.
Yeah.
No H.
And yeah, thanks a lot for having me on.
Yeah, man. No, no. It was a pleasure. And talk soon, man. I'll catch you on Discord.
See ya.